Can you guys see me clearly?
Yeah, loud and clear.
Okay. Welcome to the Crypto Bootcamp Day 2. So I'm really excited for all we have to teach today. And I think yesterday we missed a question from Paul. So I think Paul, you can ask that question right now for the benefit of all the students that would see this video later on. And so you can ask the question again.
Okay. All right. Good evening, everyone. Paul here. And first of all, I want to thank the coach for such an impactful, lecture yesterday on this crypto stuff. And my question, although I raised some questions, but I didn't know it was not seen. So I'm happy that it was seen, and I'm asked to ask the question now. So there were two questions actually I had. And the first question was that, as a beginner traders, and when you scroll online and then you see people trading, and then you see people are saying, it's risky, oh this, oh that, you lose money, oh that. So in all of that, talks of risks and the things associated with trading. So how do we now navigate? Are there principles that are needed to be abided by for us to be guided by such a way that, we can avoid those risks of falling into those, loopholes of trading? So that was actually my question. And then the other question I had, I think during the end of the class, you kind of answered it. So I don't think I'll be raising questions. So that was it. Thank you.
I think to answer the question, we are actually teaching risk management today. That's part of the things we are going to cover today. So it's going to be part of today's class. So I believe that by the end of today's class, that question will be answered. And I just want to say this as a preamble. It is not the act of trading or crypto generally, since this is a crypto bootcamp. It's not risky. It is the investor, it is the trader that is the risk. Now, if you have not built up your knowledge, over time, you are the risk. It's not the act of trading that is the risk. That's why you build up your knowledge. And when we teach you risk management strategies and all that, you will see how you will be able to protect yourself from any drawdowns to the market or losing your money completely and all that. But we'll get into that in today's class. So I think the first thing I want to get into now in today's class is, well, we are starting right now. Today we are going to cover basic chart patterns. We're going to cover the concept of dollar cost averaging, or personally what I call strategic dollar cost averaging. We're going to cover spot trading, how to use spot trading. We're also going to cover the concept of airdrops in crypto. We're going to cover risk management. We are going to do some real-time chart patterns, live coaching sessions. We're going to learn what is called market correlation in crypto. That's a very major thing in the world of cryptocurrency. We're also going to cover portfolio management, and we are going to have an introduction to futures and leverage trading at the end of the class. So by tomorrow, with all the concepts that we have learned from yesterday and today, by tomorrow we are going into trading live. We are going into the major trading strategies, and we are hitting the ground running. We are doing that tomorrow. So but without what is going to be taught today, you will not understand any of the things we are going to do tomorrow. So that's why it's important we cover this. So let's get straight into it. I'm going to share my screen right now. I'm going to share my screen. So we're going to start with this diagram on the screen right here in understanding chart patterns. In chart patterns, we are going to consider what we see on the charts for long-term investing and how we handle chart patterns when trading. Now, there are two kinds of chart patterns. The first kind of chart pattern is what we call a line pattern. What you can see on the screen is a line. It's just a line explanation, but it is a chart pattern. It's called a line pattern. Then we are going to go. Then the next kind of pattern is called candlesticks pattern. That's the next thing we are going to cover. So we are starting with what is on the screen right now. Now, in long-term investing in crypto, you can see where is highlighted on the screen. That's SDCA. What that means is strategic dollar cost averaging. Now, when the market has been low, this is for long-term investing. This is not for trading. When the market has been, let me say, for example, Bitcoin is in a bull market right now, is fluctuating between 100K and 112K. Let's say, for example, Bitcoin is 50 something K And for the past 5 months, 1 year, it has been fluctuating between 40K to 60K. I believe that that's a low point. Those are bear market levels in cryptocurrency right now. Now, SDCA, just look at the bottom part there, highlighted SDCA, buys. SDCA is called strategic dollar cost averaging. What does that mean? Dollar cost averaging, we're going to cover the concept of dollar cost averaging after now. But what that means is we break our money down. Assuming you have $1,000 and you break that $1,000 into 5 places, that is going to mean that you have $200 each. So now you are going to be accumulating Bitcoin in that zone at different prices between 40K to 60K. I'm assuming the market is down for like a period of 6 months. You are going to be accumulating your long-term investment. That's what we are talking about. You are going to be accumulating your Bitcoins at that level. Now, because we know that the market after a while is going to go back up. While the market stays down for a long period of time, especially in a bear market, the market wants to induce suffering. It wants weaker hands, people that are not strong enough to give up their Bitcoins or give up their investments, while stronger hands come in. That's what I mean. What I mean by stronger hands is big institutions that buy Bitcoin in billions of dollars, millions of dollars. They come in and they purchase these things at very low prices. Now, assuming the 6-month period of investing in Bitcoin has elapsed and the market is now going back up. Remember, I'm assuming during the 6-month period, Bitcoin was fluctuating between $40,000 and $60,000. Now, let's say it's ascending out of that zone. That's where we enter what we see there as LSI on positive trend. What does LSI on positive trend means? It means lump sum invest. What that means is that Bitcoin has been fluctuating between 40K to 60K for 6 months. Now it's ascending up, as you can see by what is on the graph. It's ascending up. Now, what we are going to do is that we are now going to carry the remaining capital that we had. Let's say, for example, we had $1,000 and we had invested $600 of our $1,000 in that strategic zone of $40,000 to $60,000. Now, as the market is ascending up, let's say now it's now 80K. So it's coming out of that range of 40 to 60K. We simply dump our $400 in the market because now we know that it's going back to an uptrend. Uptrend simply means the market is going up. The market is bullish. If you studied the terms I put on the group last night, the market is going up. So you simply put in your remaining $400 into the market. So now you have your full $1,000 in the market. Now, obviously, you'll be earning more money while the bull market or whatever is continuing. So the zones highlighted here, you can keep investing. The DCA, dollar cost averaging, but manage expectations. Now, like I said, I don't want us to be confused by this term DCA because I'm going to cover it soon today. It simply means dividing your capital. Like I already said, dividing your capital. If you are talking about $1,000, we are talking about, let's say, dividing it into $200 each 5 times. That's what dollar cost averaging means, and that is DCA. DCA, that's what it means, dollar cost averaging, breaking your money and dividing it. Now, when you are purchasing around this point in the market of DCA but manage expectations, meaning the market has left the high value zone of 40 to 60K. That should have been the zone you were accumulating aggressively. Now it's getting to a point where, it's ascending up. This is the point where a lot of people are seeing that the market is going up and they are like, let's buy into this market now. Bitcoin is going up. Let's say as at now, it's like 80 to 90K. Now you can invest a little bit at that zone, but you are going to manage your expectations. You're going to manage your expectations because at this point, it could be getting overvalued and it could crash, but it has not yet reached the peak zone of being overvalued. Now, let's leave that part. Let's go into DCA small caps only, as we can see on the screen. What does that mean? I already explained what dollar cost averaging means, so I won't go into that anymore, aside when I'm going into it mainly. Small caps are altcoins, coins that are not Bitcoin. Now, during a bull market, of course, I'm covering long-term investing chart patterns here. During a bull market, there is only a little window to buy these small coins because once a lot of people have made their money from Bitcoin, what they do is they rotate into smaller coins. Now, using that understanding, we are now going to take a little of our capital and invest it in those smaller coins. For example, we can take, let's say, for example, we were 100% allocated to Bitcoin. We can take about 20% of that money and start allocating it to smaller coins during the course of a bull market. That's basically what that concept is about. Now, the top of this pattern we can see is called SDCA sales. Called SDCA sales. What does that mean? Strategic dollar cost averaging, meaning that usually you cannot know the very top. But let's say, for example, you bought Bitcoin at 40K to 60K, you lump sum invested at 80K, you dollar cost average but manage expectations at 90K or at 100K, you dollar cost average into alternative coins that are not Bitcoins, you allocated like 30% of your capital into them. And now market has gotten to, let's say Bitcoin is about 120K. Some of those smaller coins have multiplied in price about, let me say, times 5, times 7. Let's say, for example, Solana was, let me say, $50 and now it's $200. Now we are going to start selling our long-term investments, but not all at once. We will sell them progressively at that zone called SDCA sales. Then let's say, for example, Bitcoin crashes from, this is a long-term investment now. Let's say, for example, Bitcoin crashes from 150 to let's say Bitcoin is $150. And we know that, okay, now it seems overvalued. Bitcoin is at an all-time high. Every other coin is also at all-time highs. Now, when those other coins are at all-time highs, that is usually an indication of the top of the market. So what do? You sell all your positions, or I'll teach you this in the live trading, or you short the market. What does shorting the market mean? You make money when the market is going down. I'm going to teach us how to do that in live trading sessions tomorrow. So we should not worry about that. So I'm going to move on from this chart now.